Hey everyone, welcome back to Corporate Decoder. Today we are going to be diving into a report from Morningstar, and no, it's not about your daily horoscope or how your lucky numbers will pan out, but it might just tell you whether your dividend stocks will be shining bright. Before we get started, if you appreciate getting straight insights from corporate documents like these, make sure you're subscribed. We also have a Discord community linked in the description below for even more discussion on companies and their financial filings. Morningstar, the well-known investment research and management firm, recently released a report, and the big news, they're keeping their quarterly dividend payouts consistent. In simple terms, if you own shares of Morningstar, you can expect to receive the same amount of money per share as before. Let's break down the details and see what this means for investors and the company's overall health. So what's this entire report about? It's a formal announcement filed with the Securities and Exchange Commission, or SEC, revealing that Morningstar's board has given the thumbs up to a cash dividend. Think of a dividend like a small thank you from the company to its shareholders for owning a piece of the business. The specifics are that Morningstar is set to pay out 45.55 cents per share. This might not sound like a lot if you just own one share, but if you own hundreds of thousands, it can add up. The money is scheduled to be paid out on July 31, 2025 to all shareholders who are officially on record as owners by July 11, 2025. So basically, if you held the stock before July 11, you are on the list to get paid. Now let's talk about what else is included in the filing. Beyond the dividend announcement, this report contains exhibits, which are basically extra documents that provide more details. In this case, it includes the press release where they originally announced the dividend, giving more context to the headline. Finally, at the end, the document had to be signed off by a company officer to verify it's not some kind of scam. In this case, Michael Holt, the Chief Financial Officer, COO, put his name on the dotted line. This action confirms that the information provided is accurate to the best of their knowledge. Now for my take on Morningstar. The decision to maintain the dividend at 45.5 cents per share indicates a few things. First, it suggests that Morningstar is confident in its current financial position and future earnings potential. Companies don't typically commit to consistent dividends unless they believe they can sustain them. This consistency brings a sense of reliability for investors, signaling stability. However, it doesn't necessarily mean the company is experiencing explosive growth. Sometimes, stable dividends can be seen as an alternative to reinvesting more aggressively in the business. Think of it as a balanced approach, keeping investors happy with regular payouts while also managing the company's resources. One potential risk is, of course, future performance. If Morningstar faces unexpected downturns or increased competition, maintaining this dividend level might become challenging. This could force them to borrow, sell assets, or eventually reduce the dividend, all of which could negatively affect shareholder confidence and the stock price. Overall, Morningstar's steady dividend payout reflects a conservative yet reassuring approach to managing shareholder value. It portrays a company that values consistency and stability, which can be particularly attractive in uncertain economic times. Ultimately, it will depend on the company's ability to navigate market conditions and maintain its competitive edge. Alright, that's our quick decode of Morningstar's dividend announcement. Did you find this analysis helpful? Drop a comment and let us know your thoughts. If you learned something today, please hit that like button and subscribe for more insights into the world of corporate reporting. And don't forget to join the Discord community linked in the description below. Thanks for watching, and I'll see you in the next video.